Good. Thank you. Welcome, everybody. It's great to have you here. It's great to kick off once again the 6th edition of CoMotion LA, and this 6th edition of Innovation Day and the LA New Mobility Challenge. And we thought it would be really cool to kind of kick off the Innovation Day proceedings with a conversation with my friend Dan Saunders, who won the LA New Mobility Challenge in 2020. And I remember, and just sort of what were the lessons learned from that, and sort of what the impact was on you and your business. Because I remember kind of gathering the team around, must have been around September of 2020, and we're reviewing the kind of a couple hundred submissions for the mobility challenge that year. And one of them caught our eye. It was this Zeti. It had only been created, first of all, interesting name, I thought. And we thought, yeah, but it's only like 4 or 5 months old. I mean, but they were starting to have revenue, very differentiated product. And we thought, yeah, let's give them a chance. Really interesting, from Britain. And, well, the rest is history. And you guys came here and walked away with the challenge that year. And so tell us a little bit about that, and tell us a little bit about Zeti, because it's, it's not, you don't make a vehicle. You don't operate, you're not a vehicle operator, not a mobility operator, but you operate in sort of the interstitial financial area where you help finance fleets of electrification. So tell us a little bit about that and what it was like back in 2020.
Well, look, firstly, John, great to be here. Thank you so much for having us. This is really surreal for me, I've got to say. As John rightly says, we won the New Mobility Challenge back in 2020, and when we applied, we were like, well, we don't stand a chance, do we? 4 months old at the time. Really one customer. But I think, coming back to your point, what we have is differentiated. So just really quickly to give you a background to Zeti. So we're a financial technology company, we're a fintech. And what we have is a digital platform that enables big financial institutions to finance fleets of clean connected vehicles on a pay-as-you-use basis. So pay per mile in the UK and the US, but in the rest of continental Europe per kilometre. But that really has enabled, and what we see is transport becoming really a utility, moving away from an asset you own to being transport as a service, but ultimately becoming a utility with more and more vehicles being owned by fleets. And what we saw was when we dealt with fleets, really cash is king. They operate on thin margins financially. So if we could improve their cash flow, that had real value. And then we saw vehicle manufacturers who obviously need to sell their vehicles, and more than 80% of new purchases of vehicles are using finance. But finance is a pretty commoditized product. So how do you help those manufacturers differentiate? And we saw pay-as-you-use as a way to differentiate the financing of those vehicles, so it was a sales enablement tool. And then finally, when you look at really the investment from big institutions, banks, investment houses that want to go into ESG, so sustainable assets, I think in the last 3 years, there's been $1 trillion of investment into renewables globally. But $1 trillion of auto loans are written every year. So if you can make auto finance a sustainable asset class by investing in zero-emission vehicles, you have a totally new opportunity. So that's what we did. We kind of went in the middle as a software play so that we could use money from these big financial institutions to help the fleets get zero-emission vehicles and pay for them per mile. And that, in turn, helps the vehicle manufacturers to finance their vehicles. And so where we stand to date, we're 2 years old, we've financed $30 million of vehicles, we've got about $300 million of demand as it stands today. We haven't done any marketing, we're going to push on that now. We've got a bit more backing that I can talk about.
And you've raised some capital.
Yes, so we've raised $3.5 million so far. So that's been with, we had started off with some fintech angels from the UK, pretty preeminent ones. That then led to Powerhouse Ventures coming in back in the summer. And then today we can announce that Toyota Ventures manufacturers have come in as well, and really.
Well, congratulations on that.
Thank you. Yeah, it's been a whirlwind, is the honest truth, and I can honestly say this. It really did kick off when we won the New Mobility Challenge. And I know you might expect that I've got to say that, but that is the honest truth. It was the springboard. And suddenly people started paying attention to what we were doing, and it really kicked on from there.
And I really appreciate the chunk of equity you gave us.
Oh, no. Yeah.
Okay.
Yeah, we'll talk about that
later. We'll talk about that later.
Yeah,
okay.
Yeah.
Tell us, also, you made the decision, I think it was about a year ago, to start operations in North America and open an office, in fact, here in Los Angeles. I mean, that's a long way to go for a for a UK startup.
Yeah.
But so how is that?
It's what I was going to say. Some people would say it's probably pretty rash and foolish. We made the decision at the beginning. We thought, well, we're a UK company. We're building a technology in the UK. Where's this going to be applicable to? We think it can be big, but we don't truly know. After the New Mobility Challenge, we had a lot of inquiries, and it came directly to us. And we saw this constant flow of inquiries about what we were building, and we didn't have a fully polished product. It wasn't perfect by any means, but we knew there was demand. And we had to make a decision of, do we just stay in the UK? Do we look to find somebody to partner with and actually act as our business in the US? Or do we double down and go after the US market? And after speaking to various different advisors that we respected, they either said, you can't do option B. You can't partner with somebody. You either go for it or you stay here. And then it was a choice of, well, why would you not go to the US? It's the world's biggest market. This is the most obvious opportunity we can go for. And it was kind of a leap of faith. And as you rightly said, we opened a subsidiary here back in January of last year. That's proven to be going really well. We'll have our first project, I expect, Q1 of next year, because we already have a pipeline building, growing demand from financial institutions that want to put their money to work. So it's just a really exciting time.
Do you face the problem in the United States of, the fact that states have different regulations and different regulatory environments depending which state? Does that affect you, or is it less of an issue?
No, I'm sure it will. The honest truth is we focused in on California. Because as an economy, everybody understands just the fact that it's overtaken Germany is outrageous. I'm a European. I'm like, well, Germany's got a big economy. Wow, there's a state there that's got a bigger one. So we've honed in on California. We've had to navigate certain issues. So, for instance, in the UK, we're just seen as being a software play, but over here, we're seen as potentially being a broker, which isn't how we see ourselves, but we've still got to get a license, so we're working through that at the moment. That's taken longer than we originally anticipated. I think we're pretty much through it now. But the principles of what we're doing are exactly the same. So hopefully, once we get the first few projects underway, people will understand the model and we can grow it here in LA, in California, much like we've done in the UK.
Tell me about your relations with, the OEMs, for example, with the Teslas or Arrival or, other groups like that. I mean, I can imagine that do they think, well, why should we give business to Zeti when we can develop our own in-house solutions for financing?
Yeah, no, it's a good question. I think to begin with, a lot of OEMs were confused by what we were doing. And, I can honestly say that my articulation of the product that we built wasn't great then, and hopefully it's a bit better now, but it's still not perfect. But what we've started to see is they've realized that rather than see us as being a nuisance, for want of a better term, we're actually a sales enablement tool. So if Tesla need to finance, I can tell you, we finance 100 Teslas in London for Uber fleets. If Tesla need those 100 vehicles financed so they make the sale, why would they not offer us up as an option? Because we can help them sell vehicles. And once we'd proven we could do it once, then they came back. And the same with LEVC. LEVC are owned by Geely, but they are known as making the iconic black cabs in London. So now they bring us deal flow. And so we're not building out a big sales team. What we're trying to be is an enablement for these manufacturers to put their vehicles into the market efficiently and in a way that really, helps society adopt zero-emission vehicles. That's the goal. That's what we're aiming for, is to get all vehicles to be zero emission.
It's funny, you mentioned Geely, which of course is the Chinese, one of the major Chinese EV companies, owns Volvo, for example. What's interesting is, I just came back a few days ago from Europe and the Middle East, and what's so interesting is you see Chinese OEMs everywhere really starting to grab market share, and they're a massive industry in China. You say you've had some talks with Geely, but how do you, from your vantage point, how do you see that kind of playing out?
So, just with respect to the opportunities and the growth of the Chinese manufacturers. Yeah. So, look, they are, they're serious players. There's no two ways of thinking about it otherwise. They have the capabilities. They've built the infrastructure. They can, frankly, compete on costs probably a lot better than European and North American companies, I'd imagine. And they're building quality products. These, you see what they've done with Volvo, for instance.
Yeah.
But you have the likes, as you rightly say, of these other Chinese companies like BYD, for example, NIO.
NIO, it has amazing stuff.
Yeah, exactly. So I think they cannot be underestimated. The products that we've seen are, frankly, top class.
Yeah.
But that should be good for consumers. You want consumer choice. You want to be able to bring more to the market, because the faster, I would argue at least, the faster we can help zero emission vehicles be on the road, that's better for everybody. Even if you don't care about vehicles, even if you have no interest in transportation industry, if you're reducing pollution, that benefits everybody. And that, to me, makes it worthwhile. So that's why we should be embracing, for want of a better term, all these new manufacturers, knowing that some will struggle, but at least making sure that those that have a quality product can succeed.
Right. Let me just sort of, in closing, I want to ask you a question about, as an early stage company in the UK, and we have a lot of startups and early stage companies that are from the United States here in the audience and at CoMotion the next few days. How is the environment? Is it a nurturing environment for startups in the UK compared to California? Is it, your access to kind of seed funding, government venture support, things like that?
Okay, so I'd say over the last 5 years, it's certainly improved in the UK. There are accelerators, incubators. There is increasing number of both UK and European funds, whether it's seed funds or whether it's angel investment, that's really starting to come to the fore and really helping companies like Zeti move ahead. But what I would also say is, there is still a gulf between how entrepreneurship and innovation is taken in the UK and Europe versus what happens here in the US, and particularly on the West Coast. There is still, the numbers are bigger, the attitude and the expectations are greater. And I think, from our experience, the very fact that we're a London-based company originally, but we've taken on investors from the West Coast, that's because the investors from the West Coast get it. They're not scared to take risks, and all startups are risks, and really want to back what they see as winners. And I just think it's still the scale and the attitude is just far outweighs it over here. There's just more appetite.
Okay, just follow-on question on that is this new environment, the new world that we've entered of, much, much higher interest rates, and how is that affecting your core business model?
So, because the majority of the funds that we use are from ring-fenced institutional funds that are wrapped up for a number of years, we're somewhat protected. The investment companies typically have like a hurdle rate of, say, 7%, and therefore that's not going to change anytime immediately. If anything, it's probably done us a favour. It's probably helped us. And the reason being is that what we've seen is that traditional finance isn't actually as always as transparent as you'd like it to be. So when you finance a vehicle, you might hear that you're getting an APR of, 5%. but you don't know how much is truly being financed because you don't know if there's a rebate that's going on or a discount. So actually, what we're starting to see now is those interest rates are going up, so the APRs are going up, which is typically bad for consumers, but you were paying a higher APR than you ever thought anyway, whereas ours are just staying level and they're completely transparent. So if anything, it's probably helped Zeti, but that's not to say that's, basically credit has been cheap for a very, very long time. Now it's going up. The most important thing, though, is transparency.
Right.
And I think that is the next big thing to come out of this, that finance has to be more transparent when people are getting auto loans, because at the moment it's pretty shocking what you hear about as an APR and what you're truly being charged. It can be 2 to 3 times higher. And that is a whole world that we're starting to delve into now.
Well, that sounds like a pretty cool business opportunity from the Zeti point of view.
Absolutely. Yeah. And I think our goal here is that we've just got to make this really, really simple for people to access finance, and really, really clear and transparent of what they're paying and why they're paying it. Right. And you can do that via data. So everything we do is data-driven. So all the vehicles that are funded have best-in-class telematics. And that means we can track in real time financial performance, environmental savings, loan balances, where the vehicles are for security reasons. There's all these things that you start to see. If you can bring together the data and you can be open and transparent about it, it drives value across different parts of the ecosystem.
Wow, amazing. Let me just, does anybody have a question? I think we have time for 1 or 2 questions, if anybody has a question. I'm sure Dan would be delighted to answer.
Delighted, as long as they're easy.
Okay, 1 question over there. Let me give you my mic. There you go.
Thanks. So one of the huge problems in the US is that the average price of electric vehicles is $66,000. Does Zeti somehow solve that, or do you see that your solution solves a different problem and you'll be part of the solution as the prices of electric vehicles hopefully come down?
Yeah, good question. So we think we're helping solve that problem because, quite frankly, electric vehicles, they have the potential to have a much longer shelf life. And therefore, this comes down to total cost of ownership. And therefore, if we can help finance per mile over, we're financing vehicles at the moment for anywhere between 5 and 10 years. So if you can finance vehicles over that period, it actually means acquiring them up front, that pain goes away. So to use an example of, we're doing taxis in London, you finance those over 5, 6, 7 years, then yes, they start off as being a £60,000 vehicle. But if you do it over 6 years and you do it per mile and your deposit is £1,000, it makes it pretty easy to start to accommodate that. So that's part of our job. Part of our job is to make this truly accessible finance, to make sure that these vehicles are available on the roads. And then when the prices drop, because they will drop, because more and more competition, increased capacity from the production plants, then the cost per mile will also drop because you'll be lending less money. So we see as basically offering a part of the solution for that upfront.
Can I do a quick follow-on? So there's now a bigger used market. Would you finance used electric vehicles as well?
We're trying to. And the truth of the matter there is that for financiers, for big institutions, typically they want to finance new products, not ones that are 1 or 2 years old. But if we can find the right pools of capital, absolutely. We just got to make sure that the financial institutions we work with have that appetite.